How goes it all? Welcome back to Patterson All Properties. Hopefully, you guys are having a great and exceptional Sunday. Basically, going to be talking about Fannie Mae. Most people know about them, the big financial institution. I actually came across this article today in regards to their alteration of today's real estate market due to the crazy housing shortage of 2021. And the article basically stated that with the full moon month of, sub 3% mortgage rates, ongoing housing market supply constraints, and basically a 300% increase in lumber prices over the past 15 months has prompted Fannie Mae's Economic and Strategic Group to revise several of its 2021 forecasts. And also, as of March 2021, the existing home sales report perfectly illustrated the country's core housing market issues. A decade of underbuilding led to a 3.7% decline in transactions from the prior month, even though there's never been more demand for a home than ever before in today's world. And that's the crazy part about it, no matter how you look at it. I mean, even I myself am looking forward to taking advantage of this Reading, Pennsylvania, Berks County, Pennsylvania tax sale. And it'd be my first time participating in a tax sale because, like in this instance, I don't have to go through the whole wait of 9 months to a year for the property to clear. If I actually win the bid, and which will be online, then that the property is mine, free and clear, and yeah, I can do with it what I need to. But this is interesting, even because a great example in my neighborhood, one of the houses went on the market for about 2 weeks, and even with the work that was done, it wasn't extreme work, but the interior and exterior, from an interior and exterior standpoint, the home was looking good, but for some odd reason in today's market, it didn't sell. I'm noticing now, at least in my area, the DMV area, that more homes are going up. But I noticed the older homes are not selling like they used to. They were selling like that, even if they had a great fix and flip job. Most people want, if they're going to pay a significant price, they want to be able to pay for a brand new home than paying for an older home and whatnot if they're going to have to pay 450, 500,000 some dollars. But anyways, which it was, like I said, it was a very big surprise to me in today's housing market. It goes to show that one cannot win them all, and more buyers are willing to pay more for overpriced and newer homes all at the same time, family. The article stated that Fannie Mae has long expected that a combination of waning COVID-19 induced movement into single family housing and continued tight inventories will lead to a slowing pace of existing home sales as the year progresses, the ESR group said. But however, the latter factor appears increasingly more limiting. Record high home prices tick it up in every region of the country, and there's not much hope for immediate help. Home builders face their own supply constraints as well, most notably the price of lumber and other materials, as well as a lack of buildable lots and difficulties hiring subcontractors. The group ERS group has stated, and at the end of the day, um, in March, even with a slower sales pace, a near record low of just 2.1 months of housing market supply sat ready on the market. Fannie Mae revised its single family housing starts to increase 24.8% in 2021 compared to 2020, but has yet to take into account the 13.4% drop in April. All this goes to show that permits for newer homes are slower than ever, usually during the colder months. Homes do not sell like that, and also consumer spending from January to April was down in 2021. Now, the article also stated that Fannie Mae modestly revised its real GDP expectations reward to 7% from 6.8%, primarily because consumer spending picked up as the economy reopened. The GSE experts a slow but positive unemployment recovery that will incentivize more potential home buyers to take advantage of still low mortgage rates that could boost the housing market, all at the same time. And I'm actually happy that I'm seeing more and more people travel more. And it seems like people, would have been the summertime. People are out and about, people are spending money, people are trying to have fun and, get back to some sort of normalcy. And with that, hopefully it gives a little bit more of a boost into the economy. Because remember, stimulus check, child tax credit, that's being done because they want people to spend their money, not pocket it or invest it. So, um, but with that being said, hopefully that not only incentivizes and boosts the economy, but it'll boost businesses that actually have to hire more people when the fall months get here. But we'll see what happens. Since rates have fallen back below 3%, Fannie Mae revised its expectations for purchase and refinance volume. The economic group cut 43 billion dollars from its 2021 purchase volume forecast and now estimates that purchase mortgages will hit 1.8 trillion by the end of 2021. With record low interest rates and refinancing of one's home has skyrocketed tremendously, and it has. It's very interesting where the real estate market is. Heck, most investors and flippers are having to compete in much more smaller markets nowadays around the United States, like a Harrisburg, Pennsylvania, a Grand Rapids, Michigan, etc. The article also stated that Fannie Mae expects the refinance volume in 2021 to total 1.1 trillion, an upward revision of 43 billion from last month's forecast, but a decline of 49% from 2021, said the ERS group. Now, at current interest rates, they estimate that around 51% of all outstanding mortgages have at least 50 basic point incentives to refinance, up from 42% in last month's forecast, given the recent rate declines. The article also stated that this could lead to prices rising even further, even with growth concurrently slowing in the presence of diminished labor market slack and waning physical policy support. That's what the article stated. And if such a scenario were to play out, the question then becomes whether this necessitates a response by the Federal Reserve. One can only tell. Time will only tell. While momentum in the housing market will likely continue in the near term, this is an increasingly important consideration for 2022. And when it comes to 2022, I think things will just get crazier pertaining to the real estate, especially for real estate investors. But at the end of the day, we shall see, family. And on that note, do the great three free things, family. Like, share, and subscribe. Hopefully, you guys have a great day. Remember, Patterson Oil Properties is all about purchasing tax liens, tax sale homes, wholesaling properties. We don't mind. We love connecting with other wholesalers, other real estate investors, and people who are in a distressed property situation. So, all the information is in the description, our website, contact, and phone number, email address, and all that good stuff. So I greatly appreciate it. And like I said, just don't forget to do the great three free things: like, share, and subscribe. If you're a crypto investor, I'm a part of the Gold Standard Partners crypto investment group. So if you want to be able to make money, not only buying cryptocurrency, but referring other people to do the same thing, then don't forget to sign up for free. I'll contact you directly and we'll have a discussion and we'll be able to go from there. Right. So as I always say, make money move so you will live broke like a fool. Take care, family.